Why was it the volatility between reports that stood out for you and not just the strength in isolation?
Thanks for having me, John. Look, this volatility, or what you've called ping-pong narrative, has been with us for a while. And there's a clash. There's a clash between the mindset of most analysts that tend to think that the economy is in a structural equilibrium and the reality that we are going through major transition, both economic and policy-wise. So if you're thinking one way about the economy, but it's operating in another paradigm, you will get these surprises.
So the obvious question would be, Mohamed, when you write things like how best to frame the accompanying policy regimes, what the Federal Reserve should be doing with this incoming information?
So first of all, understand that we're going through structural changes. Luckily for us, these changes are favorable, unlike what you're seeing in Europe, unlike what you're seeing in China. That's the first thing. The second, it's not just about monetary policy. Yes, the Fed was the only game in town, but that's no longer the case. Fiscal policy is having an impact. Structural reforms are having an impact. So think beyond the Fed. So what does it mean for the Fed? Continue in what I sense, and I hope I'm right, I sense is to evolution in how they are approaching policy. And you see this a little bit in John Williams' interview in the Financial Times. The first one is to be less excessively data dependent and have a more balanced, backward-looking, forward-looking approach. And the second one is to get away from this notion that you can target a specific outcome and have much more of an insurance mindset. And I think that if these two evolutions are correct and continue, it's good for the Fed and would be good for the economy.